Good evening, guys. You can see time is around 8 o'clock. Let's look into Thursdays and Fridays Nifty 50 as well as Bank Nifty trade analysis. I haven't posted that videos, guys, on that days. So let's look and dive deeper into Nifty 50 and Bank Nifty, and let's look and see how we're gonna trade. The first thing I'm gonna do is plot the weekly trend. So weekly pivot levels. Sorry, this is the weekly VWAP level. So in case you can see if anywhere the market is trying to find support in a weekly pivot level, you can see here the market is kind of consolidating above the uh, above the VWAP level as well as 920 moving average, clearly signifying bullishness. So on last Monday, you could have clearly entered long trend, keeping your stop loss just below that VWAP level. So you can see you could have just ride this trend. And coming to Thursday, guys, you can see clearly the VWAP was being broken towards the downside, clearly signifying bearishness. Again, you can see this kind of huge impulsive selling. So if you look into a 5-minute time frame and see this kind of huge selling towards the downside, so you could have expected some kind of reversals. So if you try to plot the swing points, the high to the common point between this to the common point between this, you can see this is the 50 levels where market is showing some kind of resistance level. But here you can see the market clearly broke, or you could have drawn this order block level, guys. You can see this kind of order block level clearly signifying some kind of resistance. So you can consider this to be a 5-minute order block as well. So let's look into 1-minute time frame, guys, on Thursday. So you can see yesterday there was initially a downtrend, and if you try to plot the pivot levels, so the CPR, if you try to plot the pivot levels, so if you try to plot the pivot levels, so daily pivot level, so you can see this is the daily pivot level. So this is Thursday's pivot level. So let's try to plot this pivot level, and this is Friday's pivot level. So let's try to plot even this Friday's pivot level as well. So, and let's take this out. This is the pivot levels, guys. You can see the market actually gapped down below this pivot level, clearly signifying bearishness. So you could have expected some kind of rejection of price from these levels and continuation of trend, and market might show some kind of demand like this and continue further. This is the one way we could have expected. Or you can see as soon as the market kind of opened, and if you try to plot the fib levels, the fib of the first candle, or you can consider the mid of the first candle. So this is the mid of the first candle, guys, and this is the 5-minute zone. So this is the 5-minute zone. So this is what I usually plot, guys. In my chart, there will be weekly pivot levels and there would be daily pivot levels. So I will plot even the daily pivot levels, the 20 moving average, the 21 moving average, and the 9 moving average. So you can see clearly here the market kind of consolidated, but this kind of huge impulsive candle, guys, clearly showing some kind of bullishness and changing the market sentiment from being bearish to bullish. But you could have expected some kind of rejection from this level, and price might have continued towards the downside. You can see price rejecting from this 5-minute order block levels here. This is the 5-minute order block where price rejected from these levels. You can see this kind of bearish engulfing pattern over here. You can see you could have entered as soon as this kind of candle appeared. But what happened is that you can see the market was not able to break this low or break even this low, and market didn't even cross this 21 moving average towards the downside. You can see the market didn't even break, guys. In case if the market sentiment would have been bearish, guys, the market would have clearly rejected price from this 5-minute order block levels and clearly broke this low or even this low, and the market might show some kind of retracement and again impulsive momentum towards the downside. This is how usually the market behaves. But here you can see, in case if you might have entered short position here, guys, short position here, keeping your stop loss just above that candle, you can see after this kind of huge impulsive candle, you could have easily exited your position, because that's not what we have expected. We expected a market to close below this low, guys. So in case if the market would have closed below this low or instead of this low, we could have expected the market sentiment to be bearish. But you can see the market after this kind of engulfing pattern and price rejecting from this 9 moving average and huge impulsive momentum candle, you could have expected another bearish candle like this, huge bearish candle like this, expecting the market to go towards the downside. But what happened here is that the market took support from this 21 moving average and even broke this high as well, clearly a signifying bullishness, guys, and changing the market sentiment from being bearish to bullish. So you can see this break of structure over here. So you could have easily exited your long trade, short trade in case if you might have entered after seeing kind of rejection of price from this level. And you can see this same zone over here, guys, took support over here and continued further bullishness. But what you can see is that here is where the market changed the sentiment from being bearish to bullish. So in case if you try to plot this swing, guys, the low to high of this candle, you can see price taking support from 550 levels over here. You can consider this to be the 550 level. And here is where the market is kind of taking support. And if you try to plot the Fib retracement levels, the common point between this to the common point between this to the common point between this, you can see you could have easily targeted the 100% move. This is the 100% move, guys, where you could have seen price targeted, and you could have easily taken long position here, keeping your stop loss here and targeted all the way to this 100% move. You can see how the market here kind of rejected price from this 100% move and continued further selling towards the downside. And in case if you try to plot the Fib extinction levels to see in case if the market has reached the 1.68 level, let's try to plot this, guys. So the common point between this to the high of this candle to the low of this candle, you can see this is the 1.68 level. You can see price here rejecting from this 1.68 level, guys. You can see this is the 1.68 level where price rejected, but we'll come to that later, guys. And you can see after this swing momentum, guys, where the market clearly broke this high as well, you can consider this as another break of structure. Another break of structure. Consider this to be another break of structure. And if you try to plot the demand over here, so if you consider this order block level, guys, you can see this is the last down candle before the up move. You can see the price came all the way to this demand level and rejected price from these levels. Or you could have entered long position here also, guys, after this kind of huge bullish candle breaking the 920 moving average. You could have scalped even that position. And in case for target levels, you could have easily plot the common point between this to the common point between this to the common point between this. The 100% move is where you could have easily scalped. So you can see this kind of scalping position. The 100% move is where you could have targeted, guys. So the common here is where you could have easily entered long position and keeping your stop loss. I hope you're getting what I'm saying, guys. You can see that the market here kind of showed some kind of internal break of structure towards the downside. You can see this is the break of structure, guys, and clearly showing some kind of bearish sentiment, and the market kind of retraced back. So if you consider this retracement, this swing, guys, the common point between this, the swing of this structure, the common point between this to the common point between this, you can consider this 550 levels where the price rejected from the 550 levels and continuation of price towards the downside. After price rejecting from 50 levels, the market kind of broke even this low as well, guys. You can see the market clearly broke this low, but it was not able to close. But you can see this kind of demand over here where price took support from this zone, and with this kind of huge impulsive candle will change the market sentiment from initially being bearish to bullish. And this is where you could have entered the long position, guys, after seeing this kind of huge impulsive candle trying to engulf 1, 2, 3, 4, 5 previous down candles, guys, clearly showing some kind of bullish sentiment. And since Thursday was expiry day, guys, that was monthly expiry, you can see some kind of manipulation because it was for option sellers day, guys. The market didn't move, neither move up or down, and market targeted both buyers and sellers, both buyers, retail traders, and you can see this kind of option selling where market option sellers would have made a decent profit, guys, eating out all the premium. But this is one trade where you could have taken, and this was also after this kind of huge bullish candle. You can see rejection of price from this 200 moving average. Here also you could have easily taken long position, and you could have just holded your train all the way to this 100% move, guys. This is where you could have easily, after price rejecting from this 100 moving average, you could have easily entered, keeping your stop losses above that and targeting all the way to this 100% move. This is also another good trade where you could have easily taken, guys. But as of this Thursday was option sellers day, guys, because it was monthly expiry and you could have expected no much momentum. And this is the weekly pivot level, and this is the daily pivot level, guys. So let's try to take this daily pivot levels off and even this zone over here. And coming to Friday, guys, there wasn't no momentum. You can see, guys, this market is trying to move between this range, so there is no price action. You could have easily taken your position here after seeing kind of channel pattern like this. You can see this kind of channel pattern is clearly signifying some sort of bullishness, and you could have just kept your stop loss below this and targeted towards the upside. But this is only for pattern traders, guys. But I'm trying to explain to you in a much higher levels. So once if you have been experienced, you could easily even take this position and target all the way towards the upside. And for target levels, you could have drawn this swing points, guys. The common point between this to the common point between this to the common point between this, guys. So let's try to plot this common point to this common point, guys. The 1.68 level is where you could have targeted, or the 100% no is where you could have easily targeted. I think this kind of rejection is not, this is sudden spike, guys. So it's better to see this 100% move as a target, and you could have easily you could have targeted that 100% no. So we could have even taken this position, guys. After seeing this kind of pattern, this was also another good trade. And coming to Fridays, guys, you can see how the market beautifully played on Friday. Let's try to plot the mid of the first candle, guys. So usually that's how I usually trade. So if you try to see, I'm trying to plot the mid of the first candle, and as well as 5 minutes one, guys. So 1, 2, 3, 4, 5. So the five candles, first five candles, guys. So that's usually how I trade. So you can see this is the 5 minute zone. So this is the 5 minute zone, guys. And you can see clearly here the market kind of rejected price from lower levels. You can see price after this kind of candle, guys. You can see price rejecting from this 200, the weekly pivot level, weekly VWAP level, the 200 moving average, the 9 as well as 21 moving average, clearly signifying some sort of bullishness. In case if you might have entered long position, keeping your stop loss just below that, you could have easily targeted towards the higher levels. So for targeting that higher level, guys, you could have easily drawn the retracement levels of this candle. So this candle retracement level, guys, you could have targeted the 2.68 level, but I don't recommend you this kind of momentum, this kind of risky trades, guys. But this swing high or any of those swing highs where you could have easily targeted. But let's not consider this trade, guys. But I'm telling you to show you the bullish sentiment of market, why the market has moved here, how the market, since rejection of this price from this levels, guys. In case if you can clearly see it, this zone over here, guys, there was a lot of confluence over here. The 9, the 21, the 200 moving average, the weekly VWAP level. And if you try to plot the daily VWAP levels, you can see this candle which actually broke towards the upside. You could have entered long position, and you could have even tried your stop loss somewhere here after seeing this kind of momentum. But you can see after this kind of bullish momentum, guys, the market reversed and even broke this low as well, clearly changing the market sentiment from being bullish to bearish. You can see this break of structure clearly, and you can see the market clearly broke this level, retraced and even broke, guys. And in case if the market sentiment would have been bullish, guys, the market kind of would have retraced in this pattern, guys, like this, and continue further bullishness. That's how usually the market behaves in case if the market sentiment would have bullish. And you could consider this low, guys. Once if this low, the retracement level, guys, this is the last low before the market tried to move towards the upside. And you can see once if this low is being broken towards the downside is where you could have changed your market's perspective from being bullish to bearish. And if you try to plot the anchor VWAP levels, you can see clearly the price is actually trending very aggressively towards the downside, and there is no even a proper retracement towards the upside. And clearly the market after breaking this low, guys, and you can see rejection of price from 9 moving average, the day VWAP levels, and even breaking this 200 moving the 21 moving average towards the downside is where you could have easily entered short position, guys. So this is the last support which usually took place, and you could have entered short position here once if this is broken. Keeping your stop loss just above that candle or even this zone is what we could have expected, or you could have drawn this 50 levels, guys. So after this kind of support over here, you could expect some kind of retracement. So you could have tried all the way to 50 levels over here. This is where you could have targeted. But you can see clearly the market kind of head towards the downside, and it came all the way to the pivot levels, guys. This is the daily pivot level, and here is where the market kind of came all the way to this zone. And after seeing this kind of support candle over here, but market was not able to cross the 21 moving average, and the market even broke this low towards the downside, guys. You can see clearly the market kind of broke this structure. You can consider this to be a break of structure, and you can consider this to be another break of structure. And if you try to plot the swing levels, that is the high to low of this candle, you could have tried your stop loss all the way to this zone, the 50 levels. Once if this level has been broken towards the upside, you could have easily exited, because after this kind of downward momentum, you could have expect another order block levels here. But here, and you could expect some kind of rejection from these levels, and price would have continued further towards the downside. So after this break of structure, guys, you could have expected some kind of rejection of price from 350 levels or this order block levels, and further continuation of price towards the downside. But you can see you could have tried your stop loss and you could have made a decent profit in this trade, and you could have exited your trade, guys, once if this order block level is being the 350 levels is being broken. But what you can see is that after this break of structure, guys, whenever the market suddenly retraces in the opposite direction, the market leaves some kind of PDRA. You can see this is the PDRA, guys, the swing over here, which actually broke and leaving a fair value gap towards the both the sides. You can see here the market showed some kind of imbalance, and momentum towards the upside also the market showed some kind of imbalance. And if you try to plot this PDRA, guys, PDRA can be in the form of a breaker block or inverse fair value gaps or any of this kind of things, guys. Uh, you can see this fair value gap over here and imbalance over here, where the market was not able to fill, and the price again retraced to this PDRA, and again the market kind of retraced towards the upside. So you could have easily entered at this position, guys, expecting this kind of PDRA, and where price taking support from this zone. And after this kind of huge impulsive candle, you could have easily entered. And you can see this kind of swing momentum, guys. So if you consider this high to low of this candle, so consider this swing, the market clearly broke the 50 levels here, and price rejected from these higher levels and continued towards the downside. And you can see the last support over here, which clearly broken towards the downside here. This is the last support, guys. You could expect some kind, after this kind of huge impulsive candle, the market might have clearly showed some kind of bullishness. The market retraced here and showed some kind of bullish sentiment. So in case if the market sentiment would have been bullish, this is how usually the market behaves, guys. The market would have even broken this high as well. But you can see clearly here, this was the final support, and the market kind of took support from this zone here. So if you consider this swing momentum here, the high to this high, you can see this is a 0.38 level, guys, where price is kind of taking support at this 0.38 level and clearly showing some kind of bullishness. But what happened here is that the final support here is after this kind of huge bullish momentum, the market kind of rejected price, rejected from this level, guys. You can see rejection of price from these levels, and market continued towards the downside, and this is where the market clearly broke the structure. You can see this is the break of structure, or you can consider this to be a chalk formation. And you can see the market again kind of took support from this PDRA and continued further bullishment and clearly broke this high as well. This is the break of structure. But after seeing this kind of support as well as the PDRA support over here, guys, where there is a lot of imbalance over here, and the market kind of showed some kind of bullish momentum, rejected price from these levels, and suddenly the market showed some kind of bullish momentum, guys. So after this stock formation, you could have drawn the 50 levels. So if you consider this swing over here, guys, you can see clearly market price over here is rejecting from 0.38 level. This is the 0.38 level, guys, where price is rejecting, and the market clearly even rejected price from this level, but was not able to break this low, guys. In case if the market would have been market would have broke this low, you could have expected further downward momentum, but here the market was not able to break this low and suddenly reversed towards the opposite direction, clearly signifying some kind of demand at this zone, as well as this PDRA, which acting as some sort of demand after this kind of huge impulsive candle. You could have just entered, keeping your stop loss just below that candle, guys, and targeted all the way to this zone, or you could have targeted towards the retracement levels, guys. So you can see here is where the market actually showed some sort of retracement. All the way the market was heading bullish only. So you could have seen this kind of retracement. After that, the market showed some kind of bullish momentum, was not able to break this high, guys. You can see rejection of price from these levels. So you could have tried your stop loss all the way to this zone, the last retracement. In case if the market sentiment would have been bullish, the market after this kind of retracement, guys, the market would show some kind of bullish momentum, again show retracement, or any of that price action would have been formed here. But this is where you could have just trial, guys. Or in case if the market would have retraced to 50 levels or the 0.38 levels. So if you consider this swing over here, guys, the swing over here, the common point between this to the common point between this, in case if the market would have retraced here, or price must be taking support from this 9 as well as 21 moving average, or the mid of the first candle, or anywhere of this zone, guys, where price would have taken support and continued further bullish momentum. But you can see after this kind of huge bullish candle, the price here at this levels rejected and formation of small doji candles showing some kind of exhaust in bullish momentum. And this candle, which actually formed the initial support, now formed a chalk formation, guys. You can see here the market broke this low and formed a chalk over here. And if you consider this swing momentum now, guys, if you consider the high to low of this candle, so if you consider this moment, this high to this high, you can see the 0.23 level where price is rejecting from that levels. Or you can consider this fair value gap also, guys. You can see this fair value gap over here where price kind of, this is the fair value gaps, and you could have considered this order block level also. Order block level, you can see the market kind of rejected price from this 1 minute order block. You can see this kind of huge impulsive momentum which actually broke this low and even broke this low as well. And you can consider this to be a 1 minute order block. This is a 1 minute order block, guys. Again, you can see the final support over here, and market touched this 1 minute order block, rejected price from these levels, and continued further selling towards the downside. So you could have easily entered your position here itself, guys, when the market retraced to this 1 minute order block, and you can consider this as a breakout structure now forming an inducement level. So you can consider this as an inducement level, guys, where the market kind of hesitated. And exactly at this position is where you could have easily entered short position, keeping your stop loss just above the fib of this candle, guys. So the fib of this candle, if you consider this candle over here, if you consider this momentum over here, this is where you could have easily just above that candle as well. And you could have tried all the way towards the downside. So in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level, or you could have targeted the 100% move or the midway between this. Or let's try to figure it out, guys. But our risk though is kind of defined, guys, and our target should always be unlimited. So you could have easily entered your long short trade, guys, and you could have just tried in this way. But let's decode, guys, in case if you have not entered at this momentum itself. Let's try to decode, and you can see here clearly the market changed. The last support over here was being broken towards the downside, and clearly the market formed some sort of chalk. And if you try to plot the fib levels over here, the high to low of this candle, you can see price rejecting from 550 levels over here. This is the 550 levels where price is rejecting, and price is rejecting from this 550 levels over here. And you can see clearly here the market again broke the structure towards the downside, clearly showing another breakout structure. And if you consider this swing momentum now, guys, the common point between this to the common point between this, you can see again here the price rejecting. Here also you can see the 550 levels acting as some sort of rejection. This is the another 550 levels where price is rejecting. And if you consider this order block levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 4.26 level. As you can see how you could have easily targeted. This is the 4.26 level where the market came all the way to this zone. And if not, you have entered this trade. In case if you have missed, guys, you could have easily entered your position here, this order block level as well. You can consider this order block level as well. This is another 1 minute order block, guys, where price kind of rejected, and you can see the market came all the way to this order block level, and keeping your stop loss just above and that candle itself, guys. Let's take this 1 minute order block, and you could have easily targeted all the way to 4.26 level. This was another trade where you could have taken, and you could have just hold it. And if you consider this swing momentum now, guys, and if you consider this swing momentum, the common point between this to the common point between this, and you can see this is the 550 level. This is the 550 level where price is rejecting from this level. You can see this kind of 200 moving average as well as the daily pivot and the VWAP level over here. This is the daily VWAP, guys. You can see where price is rejecting from daily VWAP level as well as the 200 moving average. And if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted another 100% move here, where price here also rejected. This is the 100% move. And you could have entered short position here, keeping your stop loss just above that candle and targeting all the way towards the downside. This is where you could have targeted, guys. This is the 4.6 level where you could have easily targeted all the way to this zone. This is 100% move where you could have easily targeted this swing trade as well. I hope you're getting, guys, what I'm saying. And you can see after this kind of 100% move, the market showed some kind of bullish candle over here. and kind of rejected price from these levels, and you can see this kind of momentum towards the upside. And here the price action is over, guys. You can see the market broke this, even this low, again retraced, again kind of broke towards the downside. This is one price action where the market completed, and the market now has to target all those sellers who might have entered here, and you can see the market kind of moved towards the upside. But in case, let's try to decode even this kind of price action and clearly find, guys. You can see here is where the market showed some kind of impulsive momentum and kind of broke structure towards the upside. And let's try to plot the demand zone over here. You can see this is the last down candle, guys, which actually broke structure towards the upside. And you can consider this to be a 1 minute order block. And you can see how the market came all the way to this 100% move and rejected price over here and showed some kind of bullish momentum. And if you try to plot the anchor VWAP levels towards here, guys, you can see after this kind of huge bullish momentum, the market again kind of retraced, but was not able, failed to break this low. And again, the market showed some kind of demand at here, guys. Or in case if you could have entered at this 1 minute order block levels, when the buys touched this 1 minute order block, guys. So you could have entered your long position here, keeping your stop loss just below that candle itself. And in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move, the 1.68 level, or you can see the market target all the way to 2.6 level. This is where you could have easily targeted, guys. The short position over here, keeping your stop loss and targeting all the way towards the downside. And even the market kind of broke even this high as well, clearly showing some kind of bullish sentiment. This is another target where you could have clearly targeted, guys. As long as price is moving above the 9 as well as 21 moving average, you can see here the market all the way above this red zone, guys. The red zone over here, market is kind of trading above this, and you could have targeted all the way. And you can see this kind of retracement, guys. And this is where you could have clearly tried your stop loss all the way to this zone. Once if this market has been broken, you could have easily entered short trade here also. But let's try to enter that trade as well as, guys. But you can see, in case if you might have missed out down here, you might have missed out here, how to add on to your trades. That's very important, guys. How to add to your winning positions. So let's try to decode and analyze how you can add on to your winning trades. Here you can see the market clearly broke structure over here. You can consider this to be another break of structure, and you can consider this swing momentum over here, guys. This swing over here, this is the swing momentum which actually broke this side. So if you consider this common point between this to the common point between this, you can see the price here taking support from 550 levels, and price kind of rejected from this levels, guys. You can see the price rejecting from 550 levels, showing some kind of demand, and you can see this resistance level over here acting as support over here. You can consider this to be another breakup block level as well. Here it shows some sort of resistance, but again the market retraced but not failed to cross the 21 moving average here. Again broke this high as well. Again the market raised, took support from this levels and continued further towards the upside. So in case if you try to plot the fib extension levels, guys, the common point between this to the common point between this to the common point between this, again you could have targeted the 1.68 level, guys. You can see this is another 1.68 level where you could have targeted. And in case if you could have entered a long position, you could have easily entered here, keeping your stop loss just below that candle and targeting all the way to 1.68 level. This is where you could have entered another long position. And here you can see that clearly the market broke the last support over here. You can consider this to be another chalk formation. And as soon as the market broke this low with this kind of huge momentum, guys, you could have easily entered short position here as well. But as of now, it's almost like 258, guys. So the market could have shown some kind of manipulation, but it's fine, guys. In case if you haven't been that experienced, it's fine if you're not entered. But let's see, guys. You can see one beautiful trade setup, another trade setup, another 1, 2, 3, 4, 5, 6 trade setups where you could have easily taken, and you could have taken another huge trade which I have already mentioned to you. The price rejected from these levels, and you could have targeted all the way towards the downside. This is where you could have targeted. So I hope you're understanding, guys, what I'm saying. In case if you find my videos helpful, please like, share and comment. And this is about Bank Nifty, guys. So in Nifty 50, I will be posting another video which explains Nifty 50 as well. Thank you, guys.